The following presentation was made possible by the Alltech Media Group, a Southern California multimedia company providing exponential branding and marketing services to all their clients. The Alltech Media Group understands the value of the 3W strategy, providing their clients proven, trackable results. Let us make it easy for you to grow your business. Visit alltechmedia.com.
Our keynote speaker this morning leads the California Department of Insurance and regulates the California insurance market, the nation's largest insurance market. He began his career as a legal aid attorney providing free legal assistance to the poor with Legal Services of Northern California. In 1995, Commissioner Jones was one of only 13 Americans awarded the prestigious White House Fellowship. He served in the Clinton administration for 3 years as a special assistant and counsel to U.S. Attorney General Janet Reno. Jones served on the Sacramento City Council from 1999 to 2004, and in 2004 he was elected to serve in the California State Assembly, where he served for 6 years. And I will note, since this is a crowd that's passionate about higher education, he was a great supporter in the legislature of higher education, and we thank you for that support. He ran successfully in 2010 for the California Insurance Commissioner and was recently reelected to his second term. Ladies and gentlemen, please give a warm Riverside welcome to California's Insurance Commissioner, Dave Jones.
Thank you very much, Lou, for that wonderful introduction. It's great to be here with you this morning. Good morning, Riverside. So I thought I'd spend a few seconds talking with you a little bit about the insurance market, what I do as the insurance regulator, and then drill down into some particular issues of importance. First, let me ask, how many of you are licensed agents and brokers? All right, or otherwise involved in the insurance industry? Great. Well, thank you for coming today. Thanks for your participation in the chamber. And everyone here, I'm sure, knows how critically important insurance is. You buy health insurance, life insurance. Think about all the insurance products that are necessary for your business. We couldn't conduct trade and commerce in California without it. It's a hugely important part of our economy. And in fact, insurers collect $257 billion a year in premium out of California. We are the largest insurance market in the United States, and I was reminded of this shortly after I was sworn into my first term in 2011. I attended my first meeting of the National Association of Insurance Commissioners. Now, unlike other financial service products, insurance is regulated at the state level, and we get together, all 50 of us from each of the 50 states, periodically to set rules and guidelines so we have some consistency across states. So I'm at my first big meeting, and they sit you at a huge horseshoe table alphabetically by the first letter of the name of your state. So there you are, seated there, and there's a flag of the state in front of you and a flag in front of you and a microphone. It's kind of like the United Nations of insurance. It's really a big deal. Don't go. It's like watching paint dry. But it's critically important for those of us that are regular. So there I am, a little bit nervous my first meeting, and they put up on the projection screen like this the relative size of insurance markets across the world. United States, biggest insurance market in the world. Germany, Japan. California, sixth largest insurance market in the world. So I'm looking at that list, and the gentleman next to me, who was from Arkansas, because A is before C, he leans over, and I want to apologize to any of you from Arkansas or from the South, because I'm not going to quite capture this, but he says, "You see that up there?" And I said, "Yeah, that's really something else. $257 billion a year, sixth largest market in the world. It's really quite a responsibility to be the regulator of that market." He says, "Yeah, don't F it up." I checked to make sure there were no kids in the audience. So, you know, that's a standard. And he reminds me of that at each quarterly meeting. How am I doing? No, you haven't effed it up yet. It's great. So, in any event. But the real standard that we adhere to at the Department of Insurance, which I'm privileged to lead, is insurance protection for all Californians. And that has two facets, insurance protection for all Californians. First, we're a consumer protection agency. And we work on behalf of businesses and consumers when they have disputes with insurance companies. The second facet of insurance protection for all Californians is making sure that we have a healthy, dynamic, robust, vibrant, competitive insurance market offering products to serve all of California's and California business needs. And that is just as important as the consumer protection function. How do we do this? I have a budget about $230 million a year, about 1,300 professionals that help me in this work. We do it in a variety of ways. We receive about 170,000 consumer calls for assistance each and every year. We go to bat for consumers and businesses in their disputes with insurance companies. Each year we end up returning about $80 million to consumers and businesses as a result of our mediating in those disputes. We do periodic examinations of the claims handling practices of the companies to make sure they're following California law. We regulate certain insurance rates, auto, home, all property and casualty. We've saved consumers and businesses $1.9 billion in my first term by using that authority in a thoughtful way, saving money, but allowing companies to make reasonable returns. I do not have authority to regulate health insurance or work comp rates. 35 other states have given that authority to their commissioner, not California. We also take very seriously our mission to make sure that companies remain financially solvent. I have auditors, accountants, examiners who go into the companies, look at their books each and every year to make sure they have enough money to pay claims, because you're paying premium, and the worst thing that would happen would be if you then have some sort of loss and you make a claim and the company's insolvent and can't pay that claim. So we take that role very seriously. When a company's in trouble, we look for suitors to take it over, buy its book of business. We've done this very successfully in a number of instances without any impact on policyholders. And if the company's really in trouble, I can take it into receivership, unwind its affairs, and make sure first and foremost policyholders are taken care of, then creditors, and at the end, the owners and investors of the insurance company. We also have a very important law enforcement function. I'm going to get into that in a moment. Now, one of the things we do that's critically important is we license 360,000 agents and brokers, and the vast majority of them are fine, upstanding people like the ones in this audience today who are providing great service with integrity and with forethought and really trusted financial advisors to help companies and to help California families meet their insurance needs. But unfortunately, in any profession, there are always a few knuckleheads, and so our role is to make sure the knuckleheads don't get into the business, so we fingerprint them, background check them, license them, test them. We've done this with some reforms to try to make that whole process a little bit easier for those that are entering into that market and that practice, but we want to make sure that people are not entering into this trusted financial advisor role who don't have the requisite skills, qualifications, and characteristics to do that. And then when they do mess up, we can sanction them, we penalize them, we can take their license away, and we do criminal investigations where they commit crimes, and we work closely with DAs to prosecute those agents and brokers that have committed crimes. So it's an important function, insurance protection for all Californians. One way we add value also with regard to making sure that more insurance companies are here in California offering more products, providing more competition, is in our licensing of companies function. We license 1,300 insurance companies currently, and one of the first things I do when I stepped into the office was I sought to reform that function to make sure that we were more welcoming, that we're looking for ways to encourage more companies to be here to sell products so there'd be more competition. I appointed to head that particular function someone from the industry who had insight from the industry perspective in terms of how we could streamline and make that function better. Our first test was when Allstate and Esurance decided to merge. Esurance had reached a point in its growth where it needed additional capital. Allstate had that capital. It was a great opportunity. We had to check it out to make sure that there were no antitrust implications, that the merger wouldn't impact the market unfavorably, and we also needed to make sure that we were meeting Allstate and Esurance's deadlines in terms of when they wanted to come to market with this merger. They gave us a very aggressive deadline. We met their deadline. We were able to approve the transaction, and those companies merged, and now Esurance has the capital it needs over the last 4 years to grow in a healthy and dynamic way, and it's selling insurance across the United States of America. Another great example is when we went through the Great Recession and the real estate market collapsed, private mortgage insurers collapsed as well, and that was a big problem. So I was wanting to encourage private mortgage insurance to come back into the market. There was a company that wanted to locate in the East Bay, a newly formed company to begin to sell private mortgage insurance. Here was the problem. They wanted to sell across the United States, which is great for California, more jobs for us, more financial capacity for us, but not one state insurance regulator wanted to be the first to issue them a license because the entire private mortgage industry had collapsed and no one wanted to take the risk to be the first license issuer. Same thing with the feds. They had to get 3 federal licenses. None of the Fed agencies wanted to be the first. I took a look at the company, took a look at their board, made sure they had the requisite qualifications, made sure they had the capital to do the job, made sure they had enterprise governance controls in place, and I was convinced they could do the job. So I was the first commissioner in the United States to issue a license to that company so they could begin selling insurance, locate their operations in the East Bay. They're there, they're selling, and guess what? Because of the role that California plays in the market, because of the leadership role that the California Insurance Commissioner plays across the United States, 49 other commissioners followed suit, the 3 federal agencies followed suit, and that company is now a going concern, employing Californians, selling insurance across the United States of America. So we're proud of the role we play at the Department of Insurance. I don't do it alone in making sure that the market functions in a dynamic, healthy way. Let me shift quickly now to our law enforcement function, which is critically important. I have 300 people that help me with this. We investigate insurance crimes. We investigate fraud against insurance companies, very complex frauds in the area of auto insurance, work comp insurance, health, disability, life insurance. And we investigate, as I said a moment ago, individuals who are agents or brokers that commit crimes, or individuals pretending to be agents or brokers, which is another scam. We go after them. 200 of our folks are sworn peace officers. This is very challenging and difficult work, because sometimes the same knuckleheads committing insurance crimes are involved in meth, human trafficking, other sorts of things. In fact, there were 2 insurance investigators who were killed in Louisiana as a part of an insurance investigation. So it's very serious stuff. But it's a big part of our mission. Workers' compensation insurance, I know, is a huge part of your cost structure as businesses. And one of the drivers of the cost of workers' compensation insurance is fraud. And there's 3 ways in which fraud occurs. Applicant fraud, that's individual claimants who are defrauding the system because they weren't actually injured at work. Medical provider fraud. These are medical providers in the work comp system or other providers who are ripping off the system by billing for things they're not doing or overbilling for things that they are doing. And third, premium fraud in the context of employers that are underreporting or misclassifying payroll and not buying enough workers' compensation insurance. We investigate all of it. Let me just share with you a couple of examples of each. In the area of claimant fraud, how many of you are familiar with that Kia commercial with the hamsters? You seen that one? All right, we arrested one of the hamsters. I kid you not. And by the way, the chief mentioned a little bit ago about social media. I mean, I've done a lot of interesting things in my life. Arresting the hamster got me more international hits than anything we've ever done. But in any event, here's what happened. The dancer who was playing the role of one of the hamsters alleged that he had injured his foot while in another theatrical performance. And he made a work comp claim against that theater company, and the insurance company and the employer began to pay that work comp claim. Later on, he was dancing very nimbly as the Kia hamster. So we arrested him, and he's being prosecuted for workers' compensation insurance fraud. Now here, locally in Riverside County, another example, this was a lady who alleged that she had injured her foot at the workplace. It could no longer work or wear high heels or, in other words, perform her job duties. And so she was being paid workers' compensation insurance. And imagine how surprised the detectives in my department were when we went up on Facebook and saw a video clip of her in the Long Beach Grand Prix beauty pageant in a bikini with the high heels walking down the runway. A little bit at odds with her workers' compensation claim. So we've arrested her, and your district attorney is prosecuting her. So these are some examples, and I want to encourage you, if you have examples of outright fraud, do contact our department. Now, obviously, we need evidence. These are crimes. There's a high evidentiary and high legal standard. So I know sometimes there are disputes about whether there is or is not fraud, but we're happy to take a look at it and see if it rises to the level of investigation, ultimately prosecution. Medical provider fraud. This is really serious stuff. And in fact, I asked my department to take a look at the average suspected losses across all sorts of insurance fraud. And what we discovered is the largest average suspected loss associated with any insurance fraud is with regard to medical provider fraud. $13 million per average open case. The next nearest is the other types of workers' compensation fraud that I described a moment ago, about $630,000 per open case. So I'll give you one example of this. This involved the owner and operator of a hospital who decided to get into the business of doing spinal surgeries. These are legitimately injured workers who needed the surgeries. The hospital CEO went out and formed a company to buy cheap spinal implant devices to implant in the backs of people that needed the surgeries. He marked up the cost of the implants, sold them to his own hospital, and they marked up the cost of those implants, and then marked up the cost of the surgeries, and then passed all those costs, $500 million in additional costs, onto workers' compensation insurers. Guess who pays for that? You do. You do, in higher premiums. And so this gentleman decided he was making so much money doing these surgeries, and these were legitimately injured workers. They needed the surgeries, but he was marking up the cost of the implants, marking up the cost of surgeries, and there was no schedule in state law at that time to set a price for those surgeries. So he could charge as much as he wanted, and the work comp carriers had to pay it. Nuts, right? Just crazy. So he's making so much money, he decides to turn it into a volume business. How does he do that? He takes between $10,000 and $40,000 out of each price of the surgery that he's making, and he kicks it back to doctors to refer more patients to him, to increase his volume, okay? That's illegal. You cannot provide bribes or kickbacks to medical providers to refer cases to you. So we opened an investigation. We put some people in undercover. We developed the case. All the evidence I've described to you is a matter of open record. It's a part of the indictment and the ultimate plea agreement that the hospital CEO, Michael Drobot, entered into. He's pled guilty to 8 federal counts. He's going to do jail time, and we've seized every single asset that he has. He no longer owns the hospital, by the way. But it gets worse. And this underscores the fact that these crimes are very, very corrosive. And as the chief mentioned a moment ago, these are complex crimes. They're very difficult to investigate. They require a lot of resources to investigate. But they're extraordinarily corrosive because they undermine civil society in important ways. And in this case, we discovered evidence that the CEO was bribing a state senator, the then chair of the state insurance committee, not the current chair, I might add, but the then chair, who's now also under federal indictment as a result of our investigation. I'll say alleged now because he still gets his day in court. But Senator Ron Calderon, the evidence that we had indicated that the hospital CEO was allegedly bribing Senator Ron Calderon because Senator Ron Calderon could prevent any bill passing that might set a schedule for these surgeries and stop the gravy train that this hospital CEO had running. So then we reached out to the FBI. They opened a parallel investigation that involved setting up a movie production studio, a sting operation, because it turned out that Senator Calderon also chaired the Film Tax Credit Commission. So this FBI agent and his secretary pretended to be movie producers seeking some sort of benefits. They gathered additional evidence, and now Senator Calderon, his brother Tom Calderon, and a series of others are under federal indictment for public corruption as a result of the workers' compensation insurance investigation that was done by your California Department of Insurance. So the third type of fraud in the area of workers' compensation is premium fraud, where employers misreport payroll or underreport payroll. And here, unfortunately, that occurs as well, and that costs all of you legitimate business owners who are doing the right thing, because then those costs get shifted to you. So just the other year, we arrested some individuals involved with a paving contracting company in Corona because they were underreporting payroll, they were misclassifying employees, they weren't paying the requisite taxes, but they weren't purchasing enough workers' compensation insurance as well. So those are the three facets. I wish I could tell you that I regulated work comp rates. I don't. I also don't do the adjudication of claims. That's done by a separate department. Nobody regulates the rates, but I do issue an advisory rate. I take a look at what the costs are in the system and where cost trends are going. And just last week, I issued an advisory indication and rate to the insurance industry, telling them that they ought to reduce rates by 10%. Because, in fact, medical costs are beginning to go down as a result of SB 863, which passed in 2012, which was a whole set of reforms to the work comp system. Now, it's up to the carriers whether they'll pass that on to you, but you might ask them, hey, the commissioner indicated that rates ought to go down 10%. What are you guys doing? And put some pressure on them. But it is free market, supply and demand. Those rates float as they will. Finally, how many people here have had a chance to take a ride from Uber, Sidecar, Lyft? Just out of curiosity. Pretty interesting, huh? This is this technology where you can call a car using your smart device. It is disruptive, it's competition, it's forcing the taxi cab and the limo owners to up their game a little bit. Very exciting innovation coming out of California, and extraordinary economic opportunity as well for the drivers of these facilities as well as for the owners, operators of the companies. How many of you asked whether the drivers had insurance? Yeah. Well, guess what? Initially, they didn't. And in fact, New Year's Eve, December 31st, 2013, an Uber driver ran over a family in the East Bay, killed a little girl named Sophia Liu, injured the mother, injured the brother. And the driver had personal auto insurance, but here's the kicker. Personal auto insurance policies have a livery exclusion. Every personal auto insurance policy written in California has a livery exclusion, and none of the drivers of Sidecar, Lyft, or Uber are covered by their personal auto insurance. Not liability, not MedPay, not comp, not any of the coverages. And so I convened a hearing, invited everybody in, including Uber, Sidecar, and Lyft, consumer groups, the insurance industry, agents, to have a conversation about this new business model. Exciting business model, competition's great, new growth, new innovation, that's what California's about. But we got to make sure consumers are protected. And I'm being given the hook, so I'll get to the end. And that is, I issued a set of recommendations that Sidecar, Lyft, and Uber get insurance. Because when you look at the system, who should really have it? The person run over? No, why should they know that they're about to be run over by Sidecar, Lyft, or Uber? The driver, well, they can't get insurance because personal lines auto insurance isn't available to them. The insurance industry, well, Sidecar, Lyft, and Uber suggested that maybe all of the personal lines auto insurers ought to be mandated to provide insurance. That didn't make sense to me. They're not the prime driver of this business activity. Sidecar, Lyft, and Uber are the prime movers in this business enterprise. Uber's market cap is about $46 billion. I think that's fantastic. That's really great news. But they're in a position to get insurance, and that was my recommendation. That got picked up at the PUC. That got added into legislation. And so this is an example where I think a thoughtful, mindful, deliberate regulator who understands economics, understands business imperatives, can play a role in not only making sure that a new market technology, a new business model can come to market, but that consumers are protected as well. So now when you ride Sidecar, Lyft, and Uber, there is some insurance, and even better than that, 8 months before a new bill comes into place setting this into effect, we've opened the doors in, we've invited insurance companies to add riders and endorsements to their personal lines policies so that there will be personal lines auto insurance available for drivers if they want to get it. We're trying to create a market for that. We've approved 2 of those policies already. We're encouraging 4 others to come in as well. And so we're about trying to create new markets, new competition, and that's what you're about here in Riverside. I applaud you for your leadership. I applaud you for what you're doing to make a difference in Riverside and Riverside's economy. And at some point, I'd love to come and talk to you about my passion for higher education and the work I've done to try to support some of your leaders like Senator Roth in his efforts. I was pleased to support him with regard to making the med school a 4-year med school, which is a huge, huge accomplishment. I'm supporting his bill, SB 22. I hope you will as well. Hope I got the number right. Yes. The bill that would provide more funding for medical residencies, because we need more funding for medical residencies, so some of the people coming out of UC Riverside Med School will stay here in the Inland Empire and be doctors and help to support this community. So thank you. Thanks for the privilege of doing this. And thanks for not playing the music.